There's a smart new website that will change the way you invest using social media.
Likefolio.
Here to explain,
A team of brothers, Andy and Landon Swan.
of Likefolio.
And they've always been building out great technology at the intersection of social and trading.
Powered by unique social data. Analyzed by legendary traders. The Likefolio broadcast starts right now.
Woo, today we're talking about Nick's favorite spot to scope out those 19-year-olds, Urban Outfitters.
There all day, every day. You understood, May?
This is actually probably going to be a shorter podcast because Nick and I don't know a lot about Urban Outfitters from a consumer standpoint. We don't go in there.
Correct. I've never been into one of their stores.
Probably the first time I'll ever be in one will be years from now with my niece, Ava, when she gets, 14, 15 years old and starts going and buying that stuff.
I should correct myself, though. I have been in an Anthropologie store. I've actually purchased a few things from Anthropologie.
There you go.
A couple glasses for bourbon sipping. And what else did I get? I think I got like some coasters, like some curtains. I bought curtains at Anthropologie once.
They sell all kinds of stuff.
They do.
Awesome.
It's actually a pretty nice store.
So we're going to be talking about this. It's in the news. Nick, give us the reasoning for why it's in the news and what's going on with the stock.
Yeah, they reported earnings a couple of days ago. It was a positive report. We saw a nice bump from, let's see, price closed at, 28.16 and pushed as high the following day. The high on the following day was 33.19. So we have a pretty significant move there. It was at 7-8%.
And what's it right now?
It's currently 32.78.
Okay. So it's up a lot off of the bottoms from a month or two ago, right?
Absolutely. The bottoms a month or two ago were as low as 20. So we're seeing a move from 20 to 33, we'll call it.
That's big.
Yeah, we've got a pretty significant move in
What's that,
place
55%
here.
Or something like that? 60%? That's a pretty big move.
Yeah, so, the earnings move was pretty interesting because not only did it gap up significantly, but it had strong follow-through that day, which was yesterday.
Right, a lot of times you'll see that big gap and then it'll just fill the gap. And
exactly. Or it'll just kind of go sideways the rest of the day. But for it to have, I think, a 5-6% earnings move on the open and then continuation, another 3-4% throughout the remainder of the day, that's pretty significant. And then today, it's holding that move. So you kind of have to respect these kind of moves. But, I'm really curious to see what the data shows.
Sure. Let's take a look at the Likefolio data. First of all, again, our data goes back to 2012, and it really peaked for Urban Outfitters back in early 2013. It's been sliding ever since. And what I'm talking about is the number of brand mentions and the purchase intent. And this company's kind of special in our data because it has some crazy brand mention spikes that revolve around controversies that it puts out. And so I like to look more at the purchase intent mentions because people might be talking about it because they do some crazy stuff, but they're not necessarily talking about buying. And I think that's what's more important with this company because that translates into sales and earnings, and that goes into the stock price.
Absolutely. So you're funneling out some of this. So give me an example of some brand mentions that may need to be funneled out.
Well, they've done so many crazy things over the years. There was a controversy around targeting kids under 21 with shirts that promoted alcohol. They had a model under 21 with shirts that say things like, I vote for vodka, misery loves alcohol, USA drinking team, things like that. Right.
USA drinking team. I need that.
Right. Gold medal. They've also had some that, those are kind of funny. You can see parents get offended, but they've had some more serious offensive ones. Like they had a yellow star with a yellow shirt with a 6-pointed star badge that looked very much like a Holocaust type outfit, like Jews were forced to wear in Nazi Germany. They had they put out a Monopoly, I guess copy, or I don't know what you want to call it, called Ghettopoly. This is bad.
That's very urban of them.
It is. Some of the streets were Cheap Trick Avenue, Smitty's XXX Peep Show, And, the cards that you get in Monopoly, I think it's Community, Chest, and Chance. Theirs was Hustle bonus cards. And one of them was you got your whole neighborhood addicted to crack, collect $50. So that kind of stuff puts crazy spikes in not only the brand mentions, but also the consumer sentiment. Consumer sentiment kind of looks like an earthquake for this company. I mean, people are all over the place. So the 1 year moving average is pretty positive, like 78%. Not great for a retailer, but not terrible. But they've got times where it gets down in the 30s because people are just anti some of the stuff that they put out there.
I'm guessing when they did the 6-point star, it got down to the 30s.
Yeah. I don't know what some of the stuff that they're thinking. It's crazy. So for this company, I like to look at purchase intent, because people can be talking all they want about how terrible these shirts are or the products. But if they're talking about buying, that's fine. That's what we want to know. And so purchase intent has been downtrending since 2013. It's had some spikes here and there, somewhat seasonal, but the last earnings report was actually predicted by our data. There was a big run up in purchase intent about a month and a half to 2 months ago. Okay. It was actually it made a new high for over a year. It hasn't been that high in over a year. And so I'm not surprised at this earnings report, but since that spike, it has since made a new lower low. This is the lowest point of data we've had in 4 years for this company. And so, yes, that spike in price is definitely justified, but I don't think that this continues. There's a lot of stories on the news about this could be the turnaround for Urban Active because they've been really selling off. I don't buy it. I think that this is a good divergence where the stock price moves away from the data. It was justified from that previous data bump, but now we're going back to normal, back to the slide. And so
even worse than normal, it sounds like.
Yeah, exactly. You're right. The downtrend is continuing, which means we're making lower lows, and this is the lowest point we've seen for Urban Active in 4 years. So I'm bearish.
Wow. So you said the lead time on the data is about a month and a half, 2 months?
On that spike, sometimes it's hard to tell because people, when they talk about buying something, they might be buying it right then. They may have just bought it within a week or two, or they may be planning on buying it. So all those kind of creates a gray area where you're not sure which earnings report that's going to be reflected in. Okay. But because this spike was like a month and a half ago, it's kind of right in the middle. And so we expected this earnings report to be the one that hit it. But now we're getting way low. So the start of this next quarter is not good for Urban Active.
Okay.
Now, who knows? Maybe things turn around, but as it is right now, I'm very bearish.
So taking the data and putting a trade around it for me is a little bit difficult because like I just mentioned, we had this really positive bullish response to bullish earnings report. This response just took place yesterday. We saw an extension after a gap up opening. We saw an extension higher. And today it's managed to hold those levels. You have to respect these kind of moves. I definitely want to position bearish into this. Just not sure I'm quite ready this soon after earnings personally. I think what I'm going to do is put it on a watch list for myself to check out. We're coming up to this 35 level, which 35 back in, June through the entire months of June and July of last year, it consolidated right there. It was a really tight range between 35 and 35.50 for 2 months. It was the tightest consolidation range ever. Sorry, 36.50. So $1.50 consolidation range. And when it finally broke below 35, that 35 support made a really strong resistance, case.
Sure.
Whether or not it's going to be resistance or not is yet to be determined. But if I see a follow through to the upside towards this 35 level and I see it starting to flatten out, then I think I'd be a little more, trigger ready to pop a little bearish trade on this URBN. But for now, I think I'm going to sit the sidelines and keep an eye on it.
All right. I'm going to have a little conviction on this one because I really like the fact that looking at the chart, our data has done a really good job of predicting this stock. And this earnings report was predicted, but now I'm saying there's going to be no follow through. So I'm looking at a June vertical spread, a credit spread, a bearish credit spread where I'm selling the 33 call and buying the 35.
Cool.
I believe that is 85 cents right now.
I'm showing 75.
Dang, man. Is the stock down?
It got cheaper.
Stock's down already?
It must be.
Must be down more. Should have done this before the podcast. So I'm showing now it's a 75-cent credit, he says. So I'm losing money. But by not entering.
You said the April.
No, June.
Oh, the June.
There we go. Okay. So the June, I'm selling the 33, buying the 35 call.
Yep, 85 cents on the nose.
So I'm risking $115 because my max loss if it goes up from here. If it stays here or goes down, I get $85 per contract. And I've got till June. So that's the trade I'm going to put on. I'm not going to do a lot of contracts, but I feel like this one is a high probability. And if the data reverses, then I can move out of it. We'll put out an alert if it does. But if it continues to downtrend, I'm going to feel very comfortable going into their next earnings report.
I think what I'll do if it gets up to 35, I'm going to do an around the money put spread. I'm going to buy an around the money put spread because the implied volatility levels got crushed on earnings, and they're still not terrible. The implied volatility lows were around 20%. Currently, it's at 35%, but it's been as high as 60%. So we're well off of the highs in implied volatility, much closer to the low end of the range.
Okay.
And I think that implied volatility is only going to go lower over the next few days. So let's say perfect world, next few days, it travels slowly up to 35 and then starts to get a little toppy. All the while, implied volatility trickles a little lower to maybe 30, 28 range. And at that point, I would be buying an around the money, probably 3 or 4 point wide put spread. So in the event I do that, I'll be sure to update everybody listening.
Sounds good.
So just one quick question here.
Sure.
I think this answers, or this might be a silly question, but there might be some other people out there wondering it. So I notice here, when I'm looking at the breakdown of Urban Outfitters, we've got their actual Urban Outfitters stores representing about 2.4 billion of their valuation. Their valuation is about 4 billion, by the way. We've got, 5 billion. We've got Anthropologie about 2.2 billion. So 2.4 in Urban Outfitters, 2.2 in Anthropologie, 1.1 in Free People and other stores. So this data, the purchase intent incorporates all those different.
Yes, it does. It's a good point. It's kind of confusing sometimes when the name of the company is one of many of their big brands, like you're talking about. It's kind of like the Coke problem. They've got 500 brands, and they're not all Coke. But yeah, Urban Outfitters has several stores, and we take in every brand that they have. And so when I talk about the purchase intent for the company, I'm talking about the sum of all the stores that go into this company. Actually in the future, that brings up a good point. As Nicole talked about last week, inside of Thinkorswim, you'll be able to break it down by brand. And so when you bring up this company, you'll be able to check the different boxes for the brands that they have and see what the charts look like for each one, or you can do them all, which is the data that I'm looking at. That's really pretty cool. But that's a good question. I'm sure a lot of people are wondering about that, especially, like I said, with a company that has the same name as one of their brands, where the other brands are also very large.
Cool. Yeah, I'm looking forward to that feature coming up. Absolutely. Should be
in May. I'll send us out with 2 more of their really strange ideas
I need to hear these. The hustle cards were great.
One of them, they had a extremely skinny girl as the model wearing a loose t-shirt, and it just said "eat less" on it. So you can imagine who that offended. And then also back in 2010, they had a shirt that had 2 color options. One of them was white/charcoal. The other one was Obama/black.
What?
Yeah, this is a publicly traded company doing this.
I mean, who are these people?
They're edgy. They're edgy and hip. I guess that's their game, but I'm betting against them in the near term, so we'll see how they do.
White/charcoal, Obama/black?
Yeah.
That doesn't even make any sense.
I know it doesn't. It should be the other way, but whatever. I don't know. Oh. It got people talking, so.
Yeah, exactly.
That's what they're all about.
That was their game plan. That was their goal.
Yep.
Gotta love it.
All right, you guys have a great day.
Take care, everybody.